Hey guys, MC Fire back. What's going on, gents, ladies, everybody? Thank you guys for supporting the channel, checking in with us, just watching us trade and doing our thing as we go through our fire journey here. So the cool part is the market's kind of gapped up today. Shout out to Mondays, woo woo Mondays. We me and Q went to go see Fluffy last night, and yeah, Q's really been taking care of me. She took us to Fluffy, right? And I was like, man, Fluffy is funny. But it was kind of like he kind of recapped on like his experiences coming up as an early comedian, and we definitely really enjoyed that. It wasn't just all fun and games and jokes. He kind of talked about his life, and you get to see like behind the scenes of or hear from him like the behind the scenes of a star's life and their journey. It's not all rainbows. They're humans too, right? But yeah, so the NQ, or really the QQQ, and the ES kind of gapping up today. So there is some gap risk. There is some gap risk on the board there, for sure, for the ES. You can see a really nice push up into this 5808 level. Now remember, we ideally, right, from the system, from the setup, looking to be in this case, I kind of told you guys we're looking to be a little bit more contrarian, reversion to the mean from a weekly and a daily standpoint, looking for it to get back to the 8-period moving average after dropping about nice sell rally of 4 weeks there, 1, 2, 3, 4 on the weekly chart. So a little extended to the downside as regards to getting close to that 3 ATR. And then when you start getting red candles that get washed, you kind of guys already kind of know how we think, right? This candle right here is for the ES getting washed to the upside, and then you have the same kind of deal happening for the NQ. There it is. It's like essentially one of these candles. It didn't show up on the NQ, but if you pull it up on the Qs, it will be there, right? There you go, right there. So massive selling on the Qs, and then you get a potential buy there. Boom, we take that. Nice little rotation to the downside there, where you could have said, okay, we could let it go. You could be a 2-bar professional here, but end up rotating back to the upside, kind of giving you, I think we talked about this last week, where if we, that's cool, I, O, and Q mark to the upside there. Let's go take a look at that real quick. But if it pops to the upside, right, again, like you get that double confirmation, that really does increase its likelihood a couple times. What sets the tone, though, is this candle, these red candles, right? It's not just it's been selling off, bear flag, right, looking for that follow through. It's really this red candle that's setting the tone. If these individuals are wrong, they're going to want to unwind their positions if it continues on the way it is, right? And so that's kind of why my bias was a little bit more bullish, where a lot of the analysts that I was watching, there was either a mixed bag or more. They're licking their chops to the downside because they're looking for a bull flag, and I was a little bit more cautious against that. Now this thing could kind of come back and continue to the downside. This might be just the rip that short sellers are looking for, but not really seeing that right now. We're waiting for news to come out. News is also on the horizon as well. Red folder news later today, which is unlike what it normally is. Normally they do it in the morning, but I guess today they just want to be late sleepers. They maybe had a meeting or something. Let's go look at that. Let's go look at what we got in play. I believe it's in the in play list there. Go back and look at our messages, see what happened. Yeah, IO and Q. Sweet. Boom. Yeah, so for this is kind of the same deal. This guy getting off sides, is something that we could look to let go. Right now, what we are seeing though is this testing this 25.96 level. So I'm a little hesitant to just go ahead and call it. Now look at this though. Essentially, if you're looking at rotation, where the trigger fired off is kind of in the middle of the road. So like 1-to-1 is in there. Didn't really get to follow through. And with the market rallying today, we could see potentially this also kind of push a little higher. That's outside of our risk profile. So, if we really get breaks above 25, if we get breaks above that 25.96 level, definitely would want to see us let that go. The crazy part though is we were like, in our heads we were like, yo, like the market is kind of pushing down. We kind of been buying the sell off there, but we were like, maybe we should get some actual positions to the downside, because of brother's wedding, bachelor party, being sick, all that stuff over the last 2.5-3 weeks. And we were like, man, so this is, we saw this sell off in the old broader markets, like the YM, the NQ, the ES, stuff like that, as a really good opportunity. Bring the YM up, right? Big opportunity there, potentially for big opportunity for buying, right? Whenever the market sells off 10%, typically a bull market, there's no, like, depending on your time horizon, there's not really a wrong answer. You're not sitting there saying, the market hasn't had what can you say, like 16 something dollar pullbacks in a massive run. So yeah, you're not gonna make a wrong move there if you look at YM or the SPY for the last 50 years and say, yeah, I wouldn't mind taking a 10% sale on something that's estimated to increase in value and go up in productivity. Yeah, I wouldn't mind to take that at a discount. But so many people, they do the opposite in the markets. We're trying not to be those people, but if we can get a nice pullback like that, sweet. And some people don't welcome pullbacks. They're like, nope, just keep going up forever. But not necessarily us. Yeah, we kind of want that pullback. So yeah, right. Yes, nice push over weekend gap. We'll bring up the SPY here, kind of show you that. Bring that to the front of the classroom here. We'll zoom in here on the chart there. But you look on the right on the daily. Actually, we'll just maximize that for you guys. Bring it to the front of the classroom. But yeah, on the daily, gaps above what we were looking at as very juicy rotation. A rotational zone marked out in purple. We'll get rid of this guy here. Boop, delete. So you can kind of see it. A weekly level here, but this rotational area, building orders kind of right there on the level. And now that we've gapped above that on the open, has the potential for a gap and go. Now we'll bring that part to the front of the classroom as well. Not you, Boeing. Get out of here. But speaking of Boeing, let's stay here for a second. Shout out to Big B, BA. Now remember, I told you guys bad news is good news. Bad news is good news. And we had a buy biased. What I mean by buy, not just purchase the stock buy, but we're looking for potential to the upside on Boeing. We're looking for that potential based off of it selling off for a good amount of time, right? Been in a downtrend essentially since February, right, of I think last year. It looks like it. February of last year, 2024. And then now at the beginning of the year, we're just like, yeah, this thing's been selling off, but really the catalyst, just listen to me here, guys. The catalyst was the layoffs, right? The catalyst was, the layoffs are happening. And, they're going to renegotiate. They got a new CEO, all that good stuff. So I was like, this is the time, right? When there's blood in the streets, buy kind of deal. And that we saw that, right? And we're seeing that. So we took our initial buyback here sometime in like September. Very patient. Moving through when the trend changed, we actually averaged in another opportunity to buy, which is per our long-term strategy. We like to buy if you're going to buy in a downtrend. Typically, our long-term strategy, I know I'm giving a lot away here, but typically long-term strategy is buy at negative 3/8 AR or buy at candle washes, right? Over outside candles getting washed. It's basically our IOU system. This would be a good opportunity to buy. We just took the initial buy because we don't know where the bottom is, and we were just like, yeah, let's just take a buy. This one though was within specs. This one was way within specs, because they got a trend change here. This one could have been another one right here. This is what I was talking about, an IOU buy. If you have a buy bias right here at a level, that was put in back here and beyond left. You see this, you say, okay, it's sold off a lot to the downside. You're getting a buy, and then you get a nice rip there. Good risk to reward too on this candle. Absolute nasty risk to reward. Loving that. Blowout candle right here. It's kind of testing the zone. Could see a little pullback here, which makes sense. Tested this a couple times, not really broken through. Actually, if you look to the right, major level there. So just something to watch. Like seriously, shout out to us for just taking the initial buys for the big BA. Could have took this one, would have been get our average in. We'll bring Amazon to the front of the classroom as well. Amazon's coming up. AMZN. We'll bring that, and then we'll go back to the ES and look at that gap there, right? So Amazon, we also did take a nice juicy buy down here. We took this buy. I mean, shout out to us for taking a play out of traditional sense, right? You just buy at a key level of support there. It wasn't really much to that. It was just, the market sold off. We like Amazon as a company. It's not going anywhere. Again, if I'm getting Amazon at a 10% discount and it's affordable, why not pull the trigger on something like that? So it wasn't like a setup. I mean, the setup candle came literally the next day where you take the buy if you're getting a buy bias anyway. So shout out to it being positive on that one for Amazon, right? Loving Amazon, like nice. When you look at on the overall, it looks just really clean. Like if it just rallies back to highs, so you're like, ooh, you're a stud, right? We all want to be winners, but the reality is we just trade what we see. We trade using fundamentals, and I was like, yep, nice blowout candle potentially to the downside. Let me go ahead and take the buy. Blowout candle being the day before, right? The day before being the blowout candle, and then it's back down there again. I was like, yeah, let's take the buy. What can go wrong? If you're at a support level, can't really go wrong there. Also, the histogram on the squeeze kind of showing like momentum might be shifting. Right? I don't really use that as a trigger. It's just a good kind of like what's price action from like the math whiz standpoint, right? From your Bollinger Band and your expansion contraction aspects, right? Because that's really what that is. It's like a momentum expansion contraction deal. So what's that looking like? What do I want to kind of know what the other guy's thinking, what the people's tools are that they're using, what they would be saying at that moment. It's a good time to buy. Well, you get a couple yellows consecutively. People are like, yeah, momentum might be shifting, right? Even though I'm like, momentum shifted back here. 2 yellows consecutively, you're looking like around here, right? Essentially where we bought, right? But where you're really looking at confirmation on something like this is like here. Even kind of sold off a little bit more, but shout out to us on Amazon. That one popped up in the feed there. So as a break of this, we put an alert here as well. Look for a reversion to the mean. This is kind of what you want to see. A nice gap and go a little bit. So the hard thing about gap and goes, and I'm gonna just tell you this: if you're an intraday, intraday being like you you trade within the day trader is on a gap and go day, you're looking potentially, like I know a lot of people would be looking for potentially for it to set in to make new lows or not new lows, make a pullback or pull back to VWAP. On a gap and go day, you might not get that. And you might get, a little fade or profit taking, and then it just keeps ripping. And so all of your short triggers are triggering, right? But you don't really get a long trigger, right? You're not getting a setup candle to the downside. And so let's go take a look at that now. Let's go pull up ES and the NQ and kind of look from a 2 minute standpoint, right? So yeah, kind of to the point, right? You got 6 o'clock. Here's your open right here. Pullback happened, very nice setup here. Boom, nice rip, right? So if you don't take the open, there's almost not really a reason to kind of pull the trigger here. And we kind of saw this when we were day trading last time too. When I actually showed you guys on day trading, that initial move down was the move of the day, right? Essentially just ran, right? So coming into this open here, nice juicy sell-off right there at the open, probably some profit taking from the gap or some people getting stopped out on the gap, boom. Then immediately, volume count, obviously this is the first, 30 minutes of the day. Washing that and then running with it, you also get a nice red bar ignored there as well. So nice follow through setup as well up into this key resistance level. And so because of that, right, you can be a little cautious up here in this zone from open. Nice rip higher there. That was essentially the play that you should have took or would have took. We're not looking to day trade this. I am mobile, so that's why you don't see my ugly face. But let's go look at the NQ. Probably going to be a similar story, kind of trading the same way. I think ES is actually relatively stronger than the NQ today. And you're seeing that, this rip wasn't as pronounced as the ES rip. But, you're looking at nice buying. Look at this juicy. We'll bring that to the front of the classroom. Hold on, let me zoom out real quick. Come on, Betsy. Gotta wrangle my charts in. Alright. So sideways price action. We kind of like to see this. Nice rotation here, but to the point, right? Our setup, our playbook, right? When you're going back to the playbook, going back to the setup, right here. Bring this to the front of the classroom as a teaching moment for you guys, right? When you start seeing stuff pull back into VWAP, look at that nice juicy green hammer right there. You get a nice 2-to-1 risk to reward there. And then something like this. This is bread and butter all day. Come down here, take the buy off the break of this high right into VWAP. Seller stepping in the VWAP, getting washed with lower volume. It's actually something we kind of like to see. A lot of people stepping in here and it kind of just slowly they get absorbed, moving higher. Stop out there at the low. And nice risk to reward there. Very, very nice. So this was in the overnight session, yes, but this is kind of bread and butter. So even big wigs kind of trade like we trade. All right, kind of that does a juicy risk to reward there for that nice rip. Obviously, for us, we typically like to target previous pivots, especially in rotational zones. Like it was. This was this area here, kind of going sideways. So definitely a rotation there, and you get that rotation there. But this move, this 1-2 punch, first one and then the second one, that nice rip happened starting from here, starting from something like that, getting washed, outside candle to the downside in the VWAP, getting washed in rotation, going back to the upside, right? And then There's some more of that action happening. This kind of happens in no man's land. I really don't count that as something you see real time. You're like, oh yeah, I'm just going to take that. And no, it's going to standard deviations. Because if that's the case, I mean, you'd want to take that one. You'd want to take that one too. See what I'm saying? So it's not something you know, but this one is almost indefinite. It's almost indefinite because you got your volume weighted average price right there, right? You might be able to throw the training wheels on here. We start going into power trend, right? Loving to see this, right? It's ricocheting off that 2 standard deviations. It's kind of grinding higher. Then you get the open, nice pullback, and then what we described, fat rip back into that power trend. Doesn't mean it will continue that power trend, but my thinking is, we do have a trade on as a reversion to the mean. But a lot of the analysts, we kind of had to hold our guns on this one, because a lot of analysts were saying, bear flag, bear flag, bear flag, screaming bear flag, bear flag, bear flag, through here. And I just didn't really feel that. I was like, if it's going to bear flag, right, you'd want to see a little bit more test of that lower deal. Ideally, the bear flags I like it to be almost like a descending triangle bear flag into the push, not a ascending triangle, and then sellers just kind of give up on the play. Not after a 4-week like sell off there. So, but reversion to the mean is definitely in play here as a factor. Not quite there yet. This is we're back on the weekly chart here. Not quite there on the reversion to the 8-period moving average. That's if you're looking at the moving average cloud, that's this guy right here. This line right there. Boom. The bottom line in the cloud, and that would put you right around resistance at 496. So up right now about 15%. Now if you said, hey, Creighton, being up 15% is good, I would be like, yeah, it's great. Up 15% on the year is nasty, especially after you had this kind of work. We'd love to be up 15%. And we are. So it's not like, can't complain there. And we're kind of excited, right? You get to see some, looking back at this chart, watching that rip there we took off the setup, we're loving our setup, right? New setup, and you just hold through insane rips. Reversion to the means, your faded rally, so to speak. One of my favorite ones we faded this year was UNH. I kind of keep going back to United Health and Boeing, because bad news to us is good news, right? Bad news here is really good news, right? Get kind of sold off here. We were talking about it. Hey, watch this. It hit the 3 ATR, nice setup, ripped into the 8-period moving average, let it go. It fell again. I actually did it again. Believe it or not, 3 ATR, there's a setup candle down there, and it ripped again to the 8. So this would have been cleaner as a reversion to the mean. It might even have gave you opportunity to take it to the downside too. Just chopping this chart all the way up. Let's pull it up here. Yeah, I remember the reversion to the mean trade was there, and I remember like this, nice buy off that 3 ATR. Red bar ignored. This is what I'm talking about. You get a green bar sandwiched by a red bar sandwiched by 2 green bars, especially on our outside candle kind of chart there on the daily. So you're looking and you're like, oh man, yeah, these sellers couldn't even make another one of its own color in short succession, and it's already pushed 3 times its average true range. So pullbacks to the 8-period moving average. Boop, nice tap, easy day, nice 1-to-1 risk reward. This risk reward was a lot better for sure, but this one is clean. So the reversion to the mean is a play, right? We have it in our playbook, and it's to be used when it makes sense, right? When the setup's there, it's to be used, and we used it, and it worked out really good. We'll go back to look at IONQ real quick, see what's going on there. Yeah, little test, and you're not gonna take it off just yet. You're just testing this rotation here. Maybe you can rotate back down. If it doesn't, we have our alert above that level and we let it go. Easy day. But sometimes you just get up there and you're just like, hey, let's just watch it, see what happens. Not getting a break. You are in rotation. So we'll just see. We'll take what we can get here. Anything else? Maybe we had some in place popped up. I don't think it probably would have popped up on our main deal here. Nothing there. And we could go through, let's see if there's any. Oh, Palantir, and then we'll go do BYD. Some of our favorites, right? PLTR. Some of our favorites on the channel, right? Palantir. Also, trading range breaking above the trading range. Nice squeeze if you like John Carter squeeze. There, nice squeeze here that it will probably fire today or register a fire today to the upside. So you could potentially see a nice 5-day run in the stock. So potentially watch out for that. Bringing that to the front of the classroom. There, actually, I probably will get some more Palantir today. Remember, we were letting it go kind of up here. So anything today, tomorrow could be a very good average in for us. Again, especially when you look at the weekly. Let's go take a look at the weekly here. In the moving average cloud coming out of it, just peekaboo high coming out of that cloud. Above 8 period, above previous week's high there on the open. So liking that for Palantir. Some of the best looking fundamentals in the market to me. Now, do they have the volume to demand the market share that they're doing? I don't know, but I like the company, and it's like right up there with, in my book, if you know anything about a company called Anduril, just the ability to innovate in a space that I think is absolutely critical but overlooked, right? Behind the scenes, AI, bringing things together so that your data is seamless. In using analysis to help you make a decision and getting paid for it, right? That's like using AI as a consultant, essentially, and it's data. So essentially, they're an AI data consultant. So shout out to Palantir. Also bringing to the front of the classroom. We saw it here. SoFi, we bring SoFi to the front of the classroom. AVGO, Tesla, we'll bring some of those guys to the front of the classroom. SMCI negative. Let's actually bring that to the front of the classroom first. On a green day, you kind of want to see what is negative. So, in an uptrend though, but it's just negative on the day. Very interesting. That is very interesting. We'll have to, maybe there's some news here. We'll have to investigate that. Unbalanced volume's negative though for the weekly. See what we got on the daily. See the outsized candle here. No. But this is what I'm talking about right here, right? Like you see this, you see ascending triangle all day. I see ascending triangle. Some people see bear flag. Like this is why people say this is why they have a market. One person sees one thing, one person sees the other, and there's a transaction, and there you go. Let's see what happens. But semiconductors or super micro, super micro here, going into a nice little squeeze there. Actually, there's actually a squeeze right there, first day squeeze there, which is, it's kind of peculiar. You think there'd be one right here, but it's based off the Bollinger Bands being inside the Keltner channel. Sometimes that takes some time for it to register that. So could fire to the upside there, maybe. We'll just stay here on this little chart here. Another one of our crowd favorites, SoFi, did throw a potential trigger here. Now, what I will say about SoFi, 21 period moving average never really rolled over. So, shout out to my old mentor, when in doubt, 21 out. Right? He's more inclined to take a bullish or bearish position based off of, does the 21 period moving average actually roll over? If the 21 period moving average doesn't roll over, he's not really looking at it as potentially a bearish play. What I mean by rollover is if it's pushing, this is still up, even though the 8 is below it, it's negative. The 21 is still general direction up, right? Upper half, right? Upper half from 0 to 90 degrees, so to speak, for all those who are super technocrats. But you're looking at a nice 21 period moving average. So he just sees this as an extension, as an extended buy. Now that can be a little confusing when things are transitioning, right? It's going from a maybe a bullish to a bearish market. I could see how that could be not a rule you would want to use. He's been doing this for a lot longer than I have. made a lot more. Like he bought Nvidia like way. I mean, it's insane how much cake this guy got on Nvidia, which is probably the next one we should bring up anyway. Yeah, he was got like in Nvidia back like way back, like back here, right? He was getting Nvidia like in this area, and with options, right? He was up like 4,000% when we found him, and shout out to him, we found him. So seeing stuff like this to him, right? 21 out, getting nice and tight, nothing crazy, and then like this era right here we got in Nvidia, really based off of kind of the new system, right? We saw this, we was like, oh, this opportunity to buy, didn't work out, stopped out. It was tight, but then we were like, there comes a point, and I can kind of see where big money, because if you're big enough, you're not looking at support and resistance. Like you are support and resistance, so to speak. You are the one absorbing. You are the one taking on those orders, right, on the other side. And so you got to make a decision. Where do I want to initiate participation, right? And this is kind of one of those things where we made that decision, just like, I'm willing to accept risk here. I certainly don't have enough resources to pull the pin on the market like that and make it explode. But in my head, I was like, well, I'm okay with accepting Nvidia risk here, right? If you're at 140, you're pulling back to 95 or 90, 95-ish. I'm okay with accepting that risk. Like I'm just totally fine with buying that risk at this major resistance level at 97, 33, whatever. I'm okay with just taking that risk, right? And why would I do that? Is I missed, you kind of miss all this. Relatively newer trader, don't know what to pull the trigger on, don't know what's making headlines, making headways. So when you start putting the system together, you're like, oh, okay, cool. And then you see something like, oh, everyone's trading this and making massive money off it. Why can't I, right? And so is this kind of being part of the club, but being part of the club, not FOMOing. You're being part of the club based off of the data. You're being part of the club based off the data, being part of pulling the trigger when it makes sense. And I think that's one of the reasons why I really like trading is when I look at this chart and I see like, oh, you got an arrow down here that's significant, that represents you making a buying decision that coalesced into making a sell decision. You pull it out at the right moment, you rolled it at the right moment, and then you look back, you're like, man, this is like artwork, right? This is your own Mona Lisa in a way that no one can take from you because you executed that trade and now the cash is in your account, right? So it's a good time. But yeah, Nvidia, it's kind of similar story almost. How low can you go really for something that is just going to get better with over time? The demand for it's going to get better over time. Now, people are more inclined to not just look for the supplier of AI chips, but look for the people that are going to executing those AI functions to make people's lives better. That's where everyone's saying the next money is. And it just kind of makes sense. Like you build the chips, but the end consumer and getting productivity and that disruption, that's where the big bucks are really going to be made. And so finding who's going to implement that innovatively, who knows, right? Who knows what's going to happen there? And drink a sip of my coffee there. Google. Oh, Google is another one that we believe is undervalued and we'd be willing to accept the risk on. Google, very, very nice pullback. We've been talking about Google, Palantir, Amazon for a little bit. And with these nice pullbacks, we kind of take a bigger, wider look, like top-down approach and like, hey, like, it's down right now, but like if you look at the earnings here, kind of advancing earnings, right, to 215, yeah, the stock's down, right? And you'd be like, oh, interesting. It's advancing. 189, 212, 215. So it's advancing earnings, yet you're getting this massive fluctuation. And that's what we kind of like to see, right? Alphabet kind of advancing the earnings. Remember, Google, they own stuff like YouTube, right? Which is really almost literally dominating people's watching. Like if you're not watching Netflix, you're almost definitely watching YouTube in some capacity. If you want to learn something, know something, like DIY stuff, tapping into these podcasts, they're trying to get a new streaming deal. So there's a lot more room for upside in Google and their AI, working with, big server farms and coordinating data with AI, stuff like that. They're just primarily positioned for that, right? So shout out to them. Also, I'll bring AVGO to the front of the classroom, and then we'll kind of taper it off here. A similar story, right? AVGO is just one where we're just yeah, I think we're okay with just accepting the risk here. We'll pull that up to here real quick. So yeah, we're just okay with really just accepting this risk along here. Not really hoping for too much, but if we get a nice ascending triangle / quote bear flag, however you want to put it, yeah, squeeze in play here. It might be a good opportunity to get some more. Earnings not in the immediate future, so that's good. It's in open waters, as we like to say. It's in open waters. Got to be careful though. That 21 period moving average is slightly up / neutral, more leaning towards slightly up there. So this is a good, for a buy bias, great buying opportunity. Remember, AVGO, we did take this, talking about that Mona Lisa, just traded it almost flawlessly. Taking this buy, roll the first sign of danger, which is this level, and then it really kind of just ran from there. We kind of had to strap in for that rip. 3 ATR, next sign of danger. And when it started getting up here, we were just every day we're gonna take some profits if it's running, right? Every day, just take some, because at this point, right, your initial risk is covered. So now it's just about painting that picture to tell a story, right? I pulled profits every single day, when I'm back in the day, right? And then you get to do that, but you get to see where this developed from, and it's really more. It's not about the bragging. It's more about how did you see that, and you're getting it like for free right here. How did you see that? Well, pulling back, these lines here are kind of your moving average cloud represented on a daily chart. So these are weekly, not daily, but weekly moving averages represented on a daily chart. And so that's what these kind of look like on a daily chart. I could probably make them thinner though. Make them so thick, I think they're. How thick are you? I don't want that moving out. I think there's a cloud behind here. Can I make them thinner? Yeah, width 1. Let's do that. We'll go width 1. There you go. Apply. Okay, width 1. Cool. And then it might be I might not be able to. Yeah, the cloud's there. They're back. We can move the cloud. We can move the cloud. Yeah, let's do this. Let's do this. Boom. Boom. Apply. Okay. So yeah, we can move the cloud, but we just made them thinner so you guys can see more chart, less indicator. And so what was it? Tight coming into this moving average cloud, so to speak. And then you're seeing this red candle set up here. Another red candle set up here, right? And so at this point, I'm watching it. Really, we got the tip off from people were saying Nancy Pelosi likes buying AVGO. It's not really good on it. So you just take that catalyst. It's the catalyst of somebody important's buying something that knows way more than you do about something, or people are wrong, going the wrong direction, right? Trends going this way, you're wrong, betting the other way, and it goes against you. Well, you're wrong. It's probably going to rip on you. And so with those edges, right, you see in this, and you're like, oh, okay, well, the nice juicy tight risk reward. Our risk profile, we don't want to get stopped out before this range, so we'll just accept the risk to down here. That's what we kind of did. And, it's a 1-to-1, kind of very similar to how we are in I, O, and Q right now. Yeah, it can go down there as long as it doesn't break. If it breaks it, we're out. We're just going to call it we're wrong. We're just going to call it we're wrong. The opportunity is here. The risk is here. If you can accept that, cool. But let's say, for example, right, you're smarter than me, right? You say, okay, well, the opportunity's here. I want to pull it. I only want to take the trade at the optimum risk to reward, which is here, right? I want it at least to be 3-1, 2-1, whatever. Fine, just wait till it gets down here and take the buy, right? You can do that. You can miss some stuff like that, but like I said, you'll probably have a better alpha than me because your risk to rewards are going to be significantly better. They're going to be not 1-1, but minimums 2-1, right? Minimums 2-1. So shout out to you for that. And then there you go. You get your one. You get your pop. But we saw it here. The setup was here. The setup was this candle. The setup was this candle, right? That's what you're looking at. The setup of this candle. That's what the buy is. So it works, and then 1-1s accomplish, and you also get another couple opportunities here. Here's a potential buy. So we should be stepping into this play, right, on the break. We did roll it. That's what this indicates is we took some profits off the table, but we kept it relatively tight. So at this point, there's still risk on here. Relatively the same amount of risk, but profits on the delta. And then nice push, right? Massive delta at this point here. And so we are, definitely going to roll it there. Like the gap fill potential is immense. So we were like, let's just roll it. I actually did pull back a little bit before we rolled it. I was like, ooh, that would have been nice for another entry if you're a buy long kind of deal. So roll every day. Every opportunity just kept grinding higher. We're like, let's just take some profits. And then we saw this guy get washed, right? And we're like, it's about to get washed. We'll go ahead and call it and close out there. That's how that works, man. If you're looking forward today, same thing, right? This guy here getting washed, take the buy. A couple days later, I think this might have been Shabbat or something. But taking the buy here, taking the buy after earnings is also in play, right? You take that buy right there. Even though you're in a downtrend, right? If you have a buy bias, your trend, you're just saying, I'm assuming the risk, for the next 20 years, 10 years. And if you think like that, you have a buy bias, right? Eventually it will go up. Right? Gold. Let's bring gold to the front of the classroom. And then I don't know if you guys know, but I really, I'm under the weather a little bit. I'm sniffling. But gold's still kind of at relative highs there. So if you're a gold bug, silver bug, nothing too worrisome. I think at this point, buying, selling the gold, you just hold it. You average in if you like. I'd be waiting for a slight pullback here, but pullbacks are in full effect, even for gold, right? Even right here. You just wait a couple months. It kind of trended sideways here. But setups are in all things, right? Bitcoin, we haven't talked about Bitcoin in a while. BTC. We'll go to Grayscale first. Maybe not Grayscale. Oh, GBTC. Sorry. Let's start there. The ETF. Grayscale Bitcoin. Pretty violent pullback. Very violent pullback there on Bitcoin. Now, there's still an uptrend, and it's kind of the point. It's kind of bouncing off this resistance here, or support here, and then pushing up into resistance currently. So something to watch is Grayscale Bitcoin. Something to watch there. Let's see. Bringing it to the front of the classroom. Nice healthy rips into resistance. So just watch that for Bitcoin on the Grayscale. But other than that, guys, I think that'll about do us. Gold, Bitcoin, silver. Oh, we can tap silver here as well. Very similar story on silver. Kind of tap into relative highs here last week, and then nice little pullback. So we get a pullback. Setup candle is definitely looking juicy. If we can get one, pull back here, nice little setup candle wash would be nice. Ooh, that'd be sweet for silver, especially in this environment. But I do see if the NQ gets its act together, right? If he gets its act together, NQ, ES, YM, if they can come together here, don't see why I'm in an inflationary narrative anyway, so I believe that most of these things will, by their nature, kind of rise. But yeah, we're looking at gold and silver still being a class A asset against those. So watch out for that. Yeah, but the narrative is gap and go. Looks like gap and go. Looks like gap and go today. And very, 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 very sweet stuff. Nice gap and go and potentially resistant. So thank you guys. MC Fire here tapping out with you guys. You guys have a wonderful rest of your day. Catch you on the flip side. Bye bye.